Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. The Fed is going to buy ETFs, and what does it mean? The central bank is acting as a buyer of last resort and propping up the bond market in the most efficient manner possible. The Federal Reserve on Monday announced a fresh round of stimulus designed to calm markets and buffer the hit to the economy from the issue at hand. Among other steps, the Fed said it would buy exchange-traded funds, or also labeled ETFs, that track the corporate bond market, a first for the U.S. Central Bank. This will provide much-needed liquidity to the bond market and to ETFs, said Todd Rosenbluth, head of ETF and mutual fund research at CFRA. I know there's a lot of new investors, but when you hear liquidity, what's the first thought that comes to your mind? If you're having a global liquidity crisis, what's the one thing that can fix that? Something called ODL. You know what that is? On-demand liquidity. On-demand liquidity is XRP. So when you start hearing these issues, that you're having problems with that, instantly in your mind, start thinking, what can fix it? XRP. Financial markets have been pummeled over the past few weeks. The global oil market has been collapsing just as a virulent issue at hand sweeps the world, sapping resources and shutting down economies. Investors all across all kinds of markets are racing to sell everything, but the dysfunction may be particularly acute in the market for more highly rated corporate bonds, which aren't as risky as high yield or junk rated bonds. Investors aren't used to contemplating such a massive wave of defaults and bankruptcies as the one that might be upon us, as companies from cruise ship operators to oil pipeline operators face near zero cash flow. So again, here, when you're talking cash, you're talking liquidity. Just so you understand the terminology and the definition and what to think when these guys start having discussions. So you have zero cash flow, you have no liquidity. What do you have for on-demand liquidity that can solve all of these problems? XRP. All of this is to make sure that people who want to sell have a buyer, explained Steve Blitz, the chief U.S. economist for T.S. Lombard. The Fed is taking both sides of the market so people who need to raise cash can do so. In a large part, the Fed is using ETFs to accomplish this goal because it's harder to buy individual bonds than stock positions. ETFs offer the benefits of impacting thousands of bonds in one simple trade, Rosenbluth told the Market Watch. And as a second step, Rosenbluth and others think the Fed's tiptoe may help calm parts of the ETF ecosphere, which has been rattled by record outflows, not just the bond market. For example, one previously reported big investment-grade corporate bond fund, iShares iBox investment-grade corporate bond ETF LQD plus 0.35%, closed on one particularly volatile day, about 5% lower than the stated value of its holdings. That means anyone who tried to sell LQD on Thursday received about 95% of what they might have expected. A powerful market stabilizer like the central bank may help buffer strains like those, and on Monday after the Fed's announcement, LQD had gained about 6%, and a competitor, Vanguard's intermediate term corporate bond fund, VCIT plus 0.25%, was about 5% higher. To me, it's always funny how they do these approaches that are scientific, etc., but the percentage is always 0.25%. I digress. We'll move forward with Dave Nadig, Chief Investment Officer and Research Director for ETF Flows, has noted in a blog post Monday morning that the Fed's purchases won't help with the challenges facing bond ETFs right now, and ETF issuers rely on third-party bond pricing services to help them determine pricing for bonds, which don't trade frequently under normal circumstances, let alone in a crisis. Those services are often seen as imperfect, despite being the best option available, help inform the price of the fund itself. In the current trading environment, Rosenbluth told MarketWatch, this is a bad environment for trading execution because things are happening so fast that it's hard to assess fair value. Expectations of climbing corporate defaults are adding to the strain. On Friday, the U.S. junk bond market's main benchmark, the ICE B of A U.S. High Yield Index, ended the day's session in distressed territory at 1,009 basis points over treasuries, according to Marty Fridson. That's the chief investment officer at Lehman Levine Fridson Advisors. Meanwhile, Goldman Sachs analysts on Friday said they anticipate high-yield defaults to spike to 13% by year-end, even with the Federal Reserve's revival of crises-era facilities to pump liquidity into financial markets. So here you have, again, really quick, when you have the Federal Reserve, all of the new stuff connected to, we've discussed months ago, the FedNow payment system connecting back to Ripple and XRP. So again, now that you're finding all of these words start connecting together, they're going to start pumping liquidity into financial markets. Obviously, this specific is most likely printed. But at the same time, you know that once they end up with no more room to print, what are they most likely going to do? I would say the probability of flipping the switch and begin using XRP is very highly in that probability, because they're already designed, they've already done it for years in testing, and they're already set up for this to begin. Just when is the right moment to flip the switch? The time will tell. But everyone keeps pointing back to end of year, or I should say before end of year 2020. And again, just as a reminder, we do have the U.S. presidential elections on November 3rd. And statistically, no sitting president has ever been re-elected in a down economy. So something has to happen in a big way. And the only thing I can think of is enacting Ripple's XRP. And the reason I state that again is because if you're having the quantum financial system, the U.S. President Donald Trump enacted that with an Executive Order 13772, states Ripple by name, and then knowing how all of this connects back to his daughter bringing out with Google the quantum computer. That was her big promoting thing that she was involved in, and the President Trump had promoting, my daughter's going to announce this, etc., etc. And then her husband, his son-in-law, Jared Kushner, connects back to Robinhood, another crypto exchange. So they know all about this much better than you and I, believe me. If you look back at Ripple articles we've discussed this year in 2020 alone, how they have lobbied the President Trump's administration to have basically good terms with Ripple promoting XRP. But again, it is a non-denominational country, X first RP, just how you have XAU for your gold. And the other great thing is XLM. So you have all of those. You know, to me, they're twins, basically from the same family. Almost as if, you know, one company, two names. But I digress. Let's move back in and finish this article. Still, many observers are applauding the Fed's commitment of doing what it can to assuage the battering of the financial markets. While Congress fiddles, Fed continues to get it done, wrote Chris Lowe, the chief economist for FHN Financial, on Monday morning after the Fed's announcement. More to the point, as Blitz notes, how we got here is 10 years of successive liquidity pumped into the market, forcing money into risk assets, building up the economy through financial asset inflation because the real side of the economy didn't come along to the same extent. The Fed created this monster, so it has to be on the other side of it now. And next article we'll discuss is crypto regulations Telegram. That move ends the hope for blockchain startups. The reason I'm really not so much focused on what's going on in the article as much as the headline, but we will get into this just a little bit so I can share my perspective, my thought, my view, and my point whenever I view this statement. After a judge in March where the U.S. District Judge ruled in favor of the SEC to put Telegram's TON and Gram token on hold, the company moves to end its $1.7 billion USD cryptocurrency project. The founder of Telegram, Pavel Durov, evokes a poignant reminder of the regulatory bodies in the world where he announces that the initial investments will be returned to the SAFT investors. Moreover, he emphasizes since now Telegram has no ties with the blockchain project and should not be held accountable for any activities surrounding it. But unfortunately, a U.S. court stopped TON from happening. How is the question? Imagine that several people put their money together to build a gold mine and to later split that gold that comes out of it. Then a judge comes and tells the mine builders, many people invested in the gold mine because they were looking for profits. And they didn't want that gold for themselves. They wanted to sell it to other people. Because of this, you are not allowed to give them gold. All right, my thoughts with that article is, I know this is a bit frustrating, but when you think, here's my perspective. When I think of the 5,000 different cryptocurrencies that are available now, a great majority of those are useless. No offense to those of you who are trying, but there are still many of them. For example, Doge, and no attack on Doge. I know a lot of people who hold it. I personally do not. But even Doge states it started off as a joke. There you have it. It starts off as a joke, and it's still sticking around. That's fine. That's great. But the point is there are a lot of cryptocurrencies out there that have no intention of really doing anything. So if you're going to continue adding those, you're only going to pull away from and distract from those that have utility and those who have a use case. And not to be so cold in agreement with this cutting off of these, but when you think about the ones that actually have, or let's say that are financially, or I should say that's changing the entire financial institution, those like XRP and XLM, then it's actually becomes a better thing, a good thing that you're getting rid of all of the useless ones. And now you can promote and focus more on those who have something useful to offer. So we can move forward with this and the prices can start going up. Because I know a lot of investors who are getting a little stressed, tense, and frustrated with that. But again, remember, as we say on this channel, it's a 4-year cycle, as we've shown many times, and next year is the 4th year since the previous bull run of 2017. So happening this year, it's early. The way I look at it, it's more exciting. There is no stress because we're going to basically start moving before EOY 2020. That's really all I came to mind when I saw this crypto regulations Telegram move ends hope for blockchain startups. I don't necessarily see that as a bad thing. I know it's frustrating for those who are trying to start something new and have an intent and actually a use case, but I wouldn't blame it so much on the judge as I would blame it on those who came in with no intent to do anything further. Another article I want to cover is like the Coston, where you can fund smart contracts with XRP launches. What my thoughts are on this article is Codius, I believe, was massive. I believe it had something huge going there, and I think, you know, there's a lot of different directions. We'll just take one because you can go so many different directions with this, and you can get distracted. I think the reason XRP, or I should say the guys at Ripple, started began obviously through the friend thing, through the mutual, you know, help in this industry with Ethereum, Vitalik Buterin. But I think with something like Coston, it leaves me to question, you know, if they are able to do their own smart contracts. I feel like that's the partnership they had begun making with the guys with Ethereum. I know currently, as we've shared the new financial system, currently XRP, XLM, and Ethereum is the basis for nearly everything. So my thoughts are, if XRP can create its own with Coston, then what's going to happen with Ethereum? But let's get into the article a little bit, because I have another point to share with this. Flare is a startup funded by Ripple's investment arm. Spring has released a test network branded as Coston. A recent update by Spring has shown the test network allows developers to fund smart contracts, making use of a one-way peg that serves as a test arena for those developing smart contracts on the Flare network with the use of Node.js. On the testnet, users burn faux XRP purposely to earn a few XRP on Coston. In the future, Flare hopes to have inclusion for a trustless, bidirectional peg that gives users the avenue to both redeem and fund XRP token on the smart contracts. The thing that I've always found interesting with Flare is Flare Consensus Protocol, FCP, leverages the Federated Byzantine Agreement, notation, and theoretical guarantees established in the Stellar Consensus Protocol paper in order to introduce federated virtual voting. So again, there we have XRP, the Spring connecting to Flare and based off of Stellar's protocol. Next article, we have National Bank of Ukraine adopts Stellar protocol to pilot digital currency e-hryvnia. And as we get into the article, the National Bank of Ukraine, the NBU, it has joined the multitude of world's central banks and is deliberating on developing their own digital currency with the intention of building an e-currency christened by e-hryvnia. But the fear of threatening the country's fiat currency and financial stability have been major concerns. Nevertheless, the NBU in the analytical report of the e-hryvnia, the pilot project, claimed that it would be using this DLT, distributed ledger technology, precisely a private version of the Stellar protocol, to observe and study the benefit of developing the digital currency as well as carry out the pilot project. And here when I see that, the first thought that comes to head, or to mind, I should say, in my head, when I see DLT, I mean, highlight instantly, I think, Ripple and Stellar with XRP and XLM. They are I would say, probably the superstars of the distributed ledger technology. The system's application software of the platform upon which the currency would be built is to be based on the SDK Stellar network with Stellar Core Horizon API, the report stated. However, NBU noted that it would discard some important features of DLT that negates developing suitable financial information systems for its country. NBU pinpointed decentralization of transaction validation function as a feature that goes against the principle that give NBU alone the right to issue e-hryvnia. NBU in the report averred that DLT major benefits is that it eliminates a single center of trust, and that's giving anyone the ability to check any transaction. This NBU says it cannot be used alongside the centralized e-hryvnia issuance model. However, DLT can be used for issuing and circulating the e-hryvnia using private version of the Stellar blockchain protocol, which meets the requirement of the national bank, and it may be unlikely due to the inability of the platform to upgrade to the basic Stellar blockchain protocol. The private version, as said by NBU, it lacks new features introduced to basic blockchain protocol, and it is unable to eliminate some of the errors and vulnerabilities of the Stellar blockchain protocol. Moreover, the private version of the blockchain protocol makes the system highly dependent on the company developing a certain protocol version, which creates competitive advantages for such company for the whole period of the platform's operation. MBU said. MBU concludes that it would rather develop the national scale system like the public versions of modern powerful blockchain protocols. So again, guys, I wanted to kind of touch up on Ripple and Stellar and discuss everything that's going on. As we know, with the Fed going to buy ETFs, so we know that the FedNow system is already set up and designed to use and take advantage of the, as stated before, with the FedNow system with Ripple's XRP. Just when will they flip the switch? And we know, as we've discussed before, the IMF having its SDRs since 1969 backed up with 0.88 grams of gold. And we've connected Stellar's XLM there. So we have these systems going around with liquidity crisis all over the planet, and we have the solution on how to fix this problem. When will they flip the switch? As we've shared many times, the IMF has the ability during a crisis to flip the switch. Literal statement from the IMF. And then we have the XRP now coming up with Coston through Flare, having the ability to create smart contracts. So maybe that will replace what they were designing with Codius, which I believed for many years that that possibly was going to be a key to the success, as Codius is a very powerful thing. If you are new, spend a few minutes. Maybe we'll discuss it again, how powerful Codius potential had in store. But it seems like they're going to move along from Codius onto Coston. And as David Schwartz mentioned, with Codius itself, if there was ability to focus, that was not a bad place to be. So here we have even Coston connecting to Spring, and XRP connects to Flare, which connects back to Stellar Protocol. Then we have the National Bank of Ukraine, which is a central bank, adopting Stellar Protocol. So we've discussed before that most of the central bank digital currencies, the best case scenario is using XRP for the wholesale tier and Stellar XLM for the retail tier. As for the third tier, the cross-border potential, both Ripple and Stellar have that capability. So it leaves them as the perfect design to fix this financial liquidity crisis. All right, guys, I want to leave you with a final thought, especially from the perspective today of being a digital asset investor. There are times where it goes up. There are times when it comes down, as it's been stated. If you cannot handle the 95% drop, then you cannot handle the 36,000% gain. The final thought I want to leave you with is, I didn't come this far to only come this far. All right, guys, this is not financial advice. It is for entertainment purposes only, and we'll catch you in the next one.